Hey everybody, and welcome back to another video. This is How to Invest. Spencer here, and I've got another cannabis company for you. The first one I featured was Harvest Health and Recreation. This one is called Acreage Holdings, and they both operate in the United States. So let's hop right into the video. Before I start, I will always say that my Webull and Robinhood link is in the description. If you guys don't have an account with them yet, some free stocks, get some free money. Always encourage it. And yeah, so let's start the video. The current stock price is $5.55. More importantly, we look at the market capitalization. It is worth $562 million, so about $500 million for this company. If we look at some of the statistics, they have an enterprise value of $764 million, which is obviously good that their enterprise is bigger than the current market capitalization, just proving that there's room to grow. Their current price to sales is a little high at 5.16, but their price to book is a little bit more reasonable at 2.4, sorry, so about 2.5. Typically for price to sales, anything around 2 or under, or 1.5 would be considered cheap or a fair value. So obviously this is quite a bit higher, about 2.5 times more. And the price to book, average price is under 3 currently, just because the market is a little rich right now. But typically anything under 1 would have been considered extremely undervalued in a less bull market. The enterprise to revenue is a 6, which is going down, which is good. The lower numbers for these ratios are typically the better, indicating that it is a cheaper stock. The enterprise value to EBITDA is negative. This just indicates that their earnings before interest, taxes, and others is negative, so they are currently losing money as a company on the bottom line. Some interesting things that I wanted to get into here is their profit margin is negative 250%. Obviously a red flag, something to be concerned about before investing in this. And their operating margin is negative 124%. Their management effectiveness, negative 14% return on assets, and negative almost 100% return on equity, which is not good to say the least. They have $32 million in cash on their balance sheet, which is pretty small compared to the market capitalization they have. If you want to do a percentage of that, it'd be in the single digits, or maybe double digits, pretty small. And their debt is pretty high compared to their cash, so they wouldn't be able to pay down most of their debts just with the cash on hand. They would have to have some sales of assets in order to pay down this debt were any just financial issue to occur, where they would immediately have to be paying down this debt. If we look at their amount of shares, they have 101 million shares. It's pretty average. A float is 89. Two things here, held by institutions is less than 1%, so this is a not very known stock within the stock market community or in specific Wall Street. And only 8% is held by the insiders within the company, which is a slightly bearish sign, just saying that they are not as incentivized to do well as other companies would be if the number would be higher here. Say if a company has 50% of their stock held within people who work for the company, they're highly motivated to do well because that's a lot of their earnings. So if we look at what Acreage Holdings is, if you go to their website, this is the first thing that pops up. I found out about them because I live in Pennsylvania and I'm a part of the medical cannabis program. And one of their products I really enjoy, one of the companies that they own, their brands, if we look here, they have 3 right now that are out, and they have 5 licensed brands that they are currently working on. So they have 2 that they're getting ready for in the works. So the Botanist, this is more in the Midwest, such as Illinois, Chicago, or Ohio. I have not had this. I cannot relate to this or give you my feedback. But if it's owned by the same company, I would assume that it's probably pretty similar to the quality standards of the one in Pennsylvania. This one I have not had, but looks enticing and would like to try if I would get the chance someday. It's called the Live Resin Project. If you did not know what live resin is, there are very, very many different nuances to cannabis and cannabis extraction. So if you want to look further into that, look up live resin versus dried resin, and just kind of the difference between that. And if you are bullish on live resin, then I think that you would be quite bullish on this company, as I am. That looks like a big winner for this. And to the one where I found this company is called Prime Wellness. They are one of the leaders in the Pennsylvania medical marijuana program. They have been around since 2018 or beyond. That's when I got into the program, and they've been there since day one, and kind of been atop of the game for the longest. I know I made a video about harvest, and they're kind of taking over a little bit for specific strains and flowers, but that company does not produce any extracts or concentrates, so they are a strictly flower company. This company does it all and is kind of winning in all fields of the market. And I will get into the stockholder presentation. So if you wanted to get there for yourself, you go to investors and you click on investors, and you scroll down and you go to events and presentations, and past events, you get their fourth quarter and full year earnings conference call. You can listen to the webcast. I already did. I will simplify it for you and give you kind of what I was thinking and what the main points are and where I'm bullish and where I'm not on this company. So let's get right into it. This is an overview giving you kind of the most important details in their opinion, and they're obviously going to be weighted towards the good side because they're going to want to pick out good highlights from their financial reports. So if we start here, the revenue increased by 10 million or 50% year over year, which is really, really good in Midwest and Mid-Atlantic regions. Those are kind of their two main markets that are there emerging right now, and we'll get into that later. Their gross profit increased from 6 million or 86 year over year, driven by revenue growth and margin improvement, which is always good to hear. Anytime you can improve margin, just proves that the company's working on profitability and not just burning money just for the fun of it. Gross margin of 46% was the highest reported in history. So their margin is 46%. That is really good. A lot of automakers are in the 20% or maybe low 30s or high teens because specifically auto is a low margin field. Obviously cannabis being different, they are a pretty high margin field considering that all you really need to do is grow this one plant and have a bunch of different processes after that to take advantage of the cash crop that it really is. So if we look here, this is where they're getting their numbers from that they're pointing out. Net revenues are increasing. So in Q4 of 2019, they were 20 million, and this quarter it was 30, so increasing quite rapidly. And for the year over year, it was 74 million in 2019 and 114 million. So that is above a 50% increase. Anytime you're over double digits in revenue growth is exceptional, and you're able to sustain that, you're really going to see a stock price improvement. But anywhere over 25, 50 is getting into really, really good numbers. And if they're able to sustain that, that would be very bullish. The profit has gone up by 20 million, so from 30 million to about 50 million in the year over year. And like they said, their margin is rapidly increasing. So for the year, it was 42%, almost 43, but for the quarter, it was almost up to 50. So they're really improving on how they're operating their business. The net loss was almost 300 million for the year, but that also includes the coronavirus. So everything that was attributed and to quarantine and lockdowns and shutdowns happened here. And they also had a lot of expansion and acquisitions during this year. So the fact that this is increasing isn't too much of a red flag because you kind of have to know the full story. And if you want to do on a per share basis, it is 2.87 per share. And if you times that by I think it was 101 million shares, you'd get the same number. So these were GAAP financial highlights, and these will be non-GAAP. So if you haven't watched any of my videos before, I kind of explained the difference between GAAP and non-GAAP. GAAP is just it's sort of a template that is used for companies to describe their earnings and how they provide them. GAAP is usually a little bit more strict on what you're able to use in your numbers, and you can't easily adjust them or fudge them easily. Non-GAAP is mostly used for fastly growing companies that don't feel that the GAAP financials accurately represent their growth story. So if we look here, the adjusted EBITDA loss of $3 million improved year over year and quarter over quarter, and refocused our strategy to continue improve financials. So anytime a company is focusing on profitability and really focusing on financials is a great sign, especially in this field when I feel like most companies aren't. I feel like a lot of these companies are just trying to get the best product out there and have the biggest growing facility and aren't really focused on becoming a net profit company and just having positive cash flows, which is the best part about a company and a business is a positive cash flow, because what you're able to do with the cash is endless. You can literally do whatever you want. You don't have to take out debt. You could literally just buy what you want, when you want, and what you need. So if we look here, anything in parentheses on here will be a negative number. So they had an EBITDA loss of $362 million as a quarter. So it's almost double of last year. And if you look here, the adjusted net loss per share actually went down on their non-GAAP numbers just because, like I said, they're easier to adjust the numbers because they don't have as strict of guidelines of what numbers to include in which columns. If you want to get more into it, look up GAAP versus non-GAAP, and get into the nitty-gritty. That's more of an accountant issue. So if you're an accountant, you can drop some tips about what it was in the description. So operations, began adult use sales in Massachusetts. That's one of their main markets. They began one in South Portland, Maine, which is a pretty big city. They completed several new Botanist branded products or SKUs in different states, including Illinois, Ohio, New York, and New Jersey, and completed an initial 10,000-foot expansion of a cultivation facility in PA. So that is very bullish because I think they only have one facility in the state in Reading, and I'm not sure the exact size of it, but 10,000 square feet is pretty big. About average size would be 50,000 or maybe a little bit less for a cultivation facility. So this is a pretty big expansion. If we look here, $33 million in cash and cash equivalents. That was in Yahoo Finance. So this is kind of a general overview of where they're operating and how they're operating. They're in 13 different states. They're in California, Oregon, Pennsylvania, New York, New Jersey. There's actually a map over here. New Jersey, Florida, Ohio, Illinois, Connecticut, Massachusetts, Vermont, and Maine. And this is where all the dispensaries are. So if you look here, only in Pennsylvania, they only have processing facilities. There's a map of this too, which is interesting. I guess they considered the wholesale to be more profitable and not really see the dispensary as profitable as a business model. So they are really focusing on the wholesale in each state and then dispensary second, which you can see here. Basically every single state that they operate in, they have a cultivation facility except for Connecticut, which they have one in Massachusetts and they can ship over state lines. So we get back to the earnings. They have 33 dispensary licenses, so 33 different operations. They have over 300,000 transactions and the average check of $118, which that's a pretty hefty bargain. If you're spending $120 at a dispensary, you're buying a good amount of product. Operational dispensaries, they have 29, so 4 will be opened shortly. They have 5 brands, which I was saying, that are in development total. So they only have 3 that are out right now. Over 250 products, just include strains, different type of concentrates, consistencies of concentrates. That is enormous. Over 250 products in 13 states. Great. And over 500,000 square feet of processing and cultivation facility, which is huge. Like I said, average is around 50 square feet, so they have quite a bit of room to grow in this case, their flowers. Key states, so if you look here, Pennsylvania, my market, really isn't even mentioned because they're only wholesaling and they only have 1. But I really do think that this would be a bullish state because recreational isn't coming anytime soon, but when it does, it will be very, very profitable. And Pennsylvania is being proven to be a very profitable medical market. So I could only imagine what the recreational population would be able to achieve. But if we look here, Illinois is their biggest currently at 12.8 million people there and a billion and 100 million TAM by 2024. So what they're trying to do, they're just trying to expand their Botanist company and Canopy's tweed flowering offering through wholesale efforts. So Canopy's actually involved in this company. And they've reached over 100% ACV, which is great. Expanded on recent Innocent, so a CBD and THC blended product. This is not very common and a very emerging field because CBD is known to kind of reduce the psychoactive effects in THC so that you're able to feel the good effects of it but not get too paranoid or feel too high or crazy. So that will be targeting a specific audience and I think could be very profitable. And they expanded an 80,000 square foot cultivation and processing facility. In Massachusetts, they got approved for adult sales with the Botanist in Worcester and Shrewsbury, and they began construction of a kitchen and processing room, so they're going to make edibles, which is great because that is a huge market, especially for people who don't want to be smoking or ingesting the product in that way. Ohio, they launched the Botanist, which is a big brand, like I've been saying, in the Midwest and kind of the Northeast or New England. Their cultivation facility planted their first seeds and expected to deliver product by Q2 of 2021. And new extraction facility is expected at the same time. Funny thing to look at here, they missed an M on the TAM, so it's 1.2 billion total addressable market in Massachusetts, which is slightly bigger than Illinois, with about half the people, so that I guess they smoke more, or like marijuana more, or cannabis, whatever you want to call it. These are the numbers that they reported above, kind of in the first or second slide, but more expanded upon. They're going over their revenues and where they're coming from. So this is their quarter over quarters, which is increasing pretty drastically. That's about a 50% increase from Q3 2019 to Q4 2020, which is about a year, which is great, 50%. And their EBITDA, as their EBITDA loss has gone down substantially. So anything in parentheses is a loss on the balance sheet, and it went down from 11,000, about 12,000 or 12 million to about 3.5 million, so almost about a quarter loss, or 75%. The same store sales growth, which is one of the most important things, and I think in this whole presentation, is beasting over the year and a half range. So it's gone from 32, 28, 29, 32, 35, 26. Anytime you're able to get double-digit sales growth, like I said, is incredible. And the fact that they're doing this consistently, growing the amount of sales in the same stores, just means that more and more people are coming in and buying more and more product, is great to hear. So transaction growth, the amount of people coming in and out of the store, has been increasing drastically too. It's slowed up a little bit in the past 2020. I think this kind of just has to do with coronavirus, and I think less people want to go frequently, and they would rather go one time and just buy in bulk. So that's kind of my theory on why these have gone down, because it aligns perfectly with the quarantine and when coronavirus. It was 23, 27, 28, increasing drastically. And then people started realizing, oh, I should probably not go once a week. Maybe I'll go once a month and just buy a crap ton more. And the amount that people are spending each time, so the average check, like they said, was 118, is increasing drastically. So it's gone from 7% to about 1%, 20%, 20%, about 20%. Always good to hear that more people are spending more and more money each time they go. And this is the last thing I wanted to look at here. The rest is just kind of where they're getting their revenue numbers and in more detail, which we've kind of already been over in a consolidated view. So these are the sales according to region. So if we look here, New England is their most profitable. Like I said earlier, Massachusetts, I guess, heavy smokers or heavy partakers, they have a 18% increase year over year, which is great, which is not their most in sales. As we can see here, Midwest is beasting. So that's the Illinois and Ohio, which are kind of a little bit untapped markets that are newer to the field and don't really have prior medical use. So they're really primed for the picking. So they are growing over 100%, which is phenomenal. And their full year is over 150%. So full year for New England is 31%, which is still really, really good. Anything over double digits, like I said, really good. And Mid-Atlantic is about 100% too. So that would be New England, or not New England, New Jersey, New York, and Pennsylvania, maybe Delaware, Maryland, if they're in there. But really where they're going to be growing is the Midwest. And my bullish thesis is on this is as states begin to legalize and get medical and recreational, the states around Illinois and Ohio that are kind of stricter on it now, especially like the Midwest and Plain states, will start changing slowly. And as they get medical, this company will be kind of the best candidate because they're already in all the surrounding states. It would just make sense that they would be able to expand into those coming states that have no program so far and would really just be able to take advantage of all the growth in there. So Midwest is something to keep an eye out for. If we look at, we already looked at the brands, the dispensaries. Last thing to look at was the leadership team. Always good to look at when you're investing into a company. I just kind of wanted to go over the CEO a little bit, Peter Galdini. He has great experience, not only in kind of medical field, but great business experience. He joined the company in December 2020, so they've only been public since about December 2020. And we'll get into the chart a little bit as we close off, but he's been serving for 18 months as the CEO and director of Bespoke Capital Acquisition Corp, a cannabis-focused SPAC. So this kind of just shows that he's ahead of the curve, that he's been in a SPAC for 18 months and kind of understood the value of going public through a SPAC. If you guys don't know, I might want to do a video on that, but SPACs are just a great way for a company to come into the public markets without having as much scrutiny as they would with an IPO. Some of his experience is he developed extensive management in heavily regulated industries while at Pfizer, Bayer, and Wyeth, which are all huge, huge companies in the medical field. So this guy has great experience, not only medical, but in economics and business management. He went to International Economics and Management of Bocconi University in Milan. So great things from him. And that was just about it. You can look more into the COO and CFO if you would like, or the board of directors. But the last thing I wanted to get into was the stock chart. So if we look here, the past 6 months, they've only been public since December 15th, and they've over doubled since they went up. They went, well, almost. They were at $3.50, so $7 would have been a double, and they did at one point. They were up to $8. They overheated because it's the new thing in the market, especially with cannabis stocks. They tend to rally quite drastically in the beginning. But if we look here at the trends, it is on a pretty sharp, drastic trend downward in the 1 month chart, going from $7 down to 5.5, and you can see it's on a downward slope. Even the past 5 days, it's been on a downward slope. So my thoughts on this stock were, I'm pretty bullish on the overall company itself, but the stock price at this current price and evaluation of 562 is a bit too rich for me. If this were to fall below 5 or $500 million in a market capitalization, it would definitely be intriguing as a multi-year investment opportunity. So if it does, I might make another video on it stating that I will be buying, or if it doesn't, then no really love lost. It's not really a big deal. There's other deals out in the market. So if this drops further and further, be on the lookout to buy. Oh, and the last thing, if you are confused about where you can buy this or other cannabis stocks, it is an OTC. If you can see here, it means over the counter. Anything that is related to the cannabis field selling flower in the United States will be an OTC because it's still technically federally illegal. So they have to do over the counter, which you are buying the stock directly from the company itself. There's no middlemen like there are when you're buying other stocks from your brokerage. There, you are buying from a market maker who sells to a brokerage, and then you get it. So there's a middleman in between here that you are buying directly from the company. And to do that, you would have to go to a brokerage that sells OTCs. The one that I use is TD Ameritrade, as we can. You can usually see it is affiliated with CNBC, and I think maybe Yahoo Finance too. I'm not quite sure about that, but I know they're definitely affiliated with CNBC. But really, any brokerage besides Webull and Robinhood should offer this stock because most brokerages are OTCs compatible. Like I said, Robinhood and Webull being the only ones that I really don't know that don't offer them, which I think could be a good bullish point for them to grow into. Thank you guys all for watching if you made it this far, and have a good one. Check more into Acreage Holdings, ticker symbol ACRHF.